Welcome. In this video, will Zbcn coin new peak come? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When the chart is carefully examined, it becomes clear that a highly notable and technically significant structure is present in the area the price is currently touching. This region stands out as a bullish order block, a zone where the price previously reacted sharply and where strong buyers stepped in. Such structures are considered areas where institutional investors or high-volume buyers execute their trades, and when the price reaches these levels, strong upward reactions typically occur. Right now, the fact that the price has once again reached this critical area may be laying the groundwork for a potential bullish bounce. Order blocks hold significant importance, especially in strategies that follow smart money movements. A bullish order block represents an area where, after the price reaches a certain zone, a volume-backed rise occurs, indicating buyer dominance. Once these areas are formed, there is a high likelihood that the same buyers or new investors looking to enter positions will step in when the price revisits these zones. Therefore, the current approach to this strong structure is a positive development in terms of technical analysis and should be monitored closely. Looking at historical data, it's observed that reactions from this bullish order block have been strong and high in volume. This suggests that significant buy orders may be clustered in this area. The price revisiting this zone again creates a valuable opportunity for investors watching for potential buy setups. Especially if the price stabilizes in this area, moves sideways, or forms wicks with bullish candles, it could be the first technical signal that this level is starting to work again. The current market structure also supports this scenario. Other technical indicators, momentum indicators, or volume analysis show that the selling pressure is weakening as the price approaches the bullish order block, and buyers are gradually stepping in. This further strengthens the possibility of a bullish bounce from this level. Another important feature of bullish order blocks is that once the price bounces and starts a bullish trend from these areas, it often does so steadily and covers a wide range. So, a bounce from this area might not just be a short-term reaction, but could also signal the beginning of a medium to long-term uptrend. If this bounce is supported by strong volume, the upward momentum is likely to accelerate even more. This presents an attractive and positive outlook for investors. In addition, the timing of the price currently being within the bullish order block is also a key factor. Typically, in these zones, the price consolidates for a while, gathers liquidity, and then makes a sudden move to determine direction. The current situation suggests we may be in that preparation phase, and the fuse for a large upward movement could ignite at any moment, especially if long wicked candles, wick-heavy formations, and consecutive bullish candles begin to form. This would be strong evidence that the bullish order block is being activated again. It's also worth noting that this bullish order block aligns not only with past price reactions, but also with a current psychological support level. Investors remember this area as one where the price previously stalled and reversed, which strengthens it technically as a support zone. This psychological support may increase the tendency of investors to buy from this area and could generate the necessary buying power for a bullish breakout. One of the most important signals to watch at this point is volume. If the price begins to move upward from this area and is supported by strong volume, it becomes possible to confirm that the bullish order block is in effect and that a strong upward wave has begun. Especially in 4-hour and daily timeframes, these kinds of volume-backed moves boost investor confidence and lay the groundwork for the price to reach higher levels. But we can't make decisions based solely on the order block. Let's take a look at other metrics as well. Stay tuned. When the chart is carefully examined, a highly promising and classic reversal pattern appears to be forming, the inverse head and shoulders pattern. Known in technical analysis for emerging toward the end of downtrends and often signaling the beginning of a strong upward move, this pattern is gradually taking shape within the current market structure and starting to generate positive signals. At the moment, the price action is in the process of forming the most critical part of this pattern, the head. If this process completes, a strong and steady upward momentum can be expected in the coming days. The inverse head and shoulders pattern is fundamentally composed of 3 lows. The first low represents the left shoulder. The deeper second low, which is the lowest point of the formation, forms the head. And finally, the third low, the right shoulder, completes the final part of the pattern. The development of such a structure in price action is a key technical signal that the market is starting to gain strength from the bottom and that buyers are becoming increasingly active. Currently, the price's attempt to form the head indicates that this pattern is beginning to take shape seriously. This marks a critical stage that investors should closely monitor. Specifically, the fact that the price has dipped slightly below its previous low and is now seeing strong buyers re-enter the market may indicate that the head portion is being clearly constructed. This area serves as a crucial test of market participants' confidence. A strong reaction from this low is a clear sign that investors now view these levels as cheap and attractive. This suggests that the market may be preparing for a significant upward move in the medium term. One of the most important aspects of the inverse head and shoulders in technical analysis is the neckline, which is a horizontal or slightly sloped resistance level. Currently, the price has not yet reached this critical level as the head section is still forming. However, once this process is complete and the right shoulder begins to form, the price is expected to move toward the neckline. If the neckline is broken decisively, the pattern's technical target becomes valid. This target is typically calculated by projecting the distance from the head to the neckline upward, suggesting strong bullish potential for the price. The currently forming head also indicates that the price is establishing a psychological bottom. At this level, buyers are re-entering the market, selling pressure is beginning to ease, and the price appears ready to reverse upward. In particular, the emergence of high-volume buying in this area would confirm how strong a support zone this bottom has become. Additionally, momentum indicators and volume analysis may support the idea that the price is gradually gaining upward momentum. Moreover, the forming inverse head and shoulders pattern carries significance not only technically, but also psychologically. These patterns represent a psychological shift among investors. The first drop at the left shoulder shows that uncertainty still exists. The deep fall at the head reflects peak panic selling and despair. However, the recovery that follows the head begins to establish a sense that the bottom may be in. With the formation of the right shoulder, investors begin to believe more in the bullish outlook, and this belief is reflected in price action. As a result, when the neckline is broken, it creates a strong environment of confidence, and the price begins a powerful bullish rally. A similar psychological transformation may be taking place right now. If this head area, which is technically supported, proves to serve as a solid base, it is likely that a more defined upward trend will emerge in the coming days as the right shoulder gradually forms. Taking a deeper look at the technical picture on the chart, the MACD indicator is starting to send traders some very noticeable and promising signals. In particular, the relationship between the MACD line and the signal line gives strong signals that we are on the verge of an important transformation in the current market conditions. Currently, these two lines are converging upwards from the lows, signaling that the price is gathering strength at the lows. If this convergence results in an upward crossover, this could be interpreted as a very positive development in terms of technical analysis. This is because a bottom-up crossover on the MACD has historically often been a leading indicator of strong bullish moves. The very nature of the MACD indicator, based on the divergence and convergence of two different moving averages, provides deeper and more refined insights into price movements. In the current situation, the MACD line is moving upwards from below the signal line, indicating that momentum is slowly starting to turn in favor of the buyer. MACD crossovers should follow. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.